we exist only on an app. Our vision is actually to be the biggest AI lender in the world.
Mm-hmm.
So what we are doing is providing access to funding for many people who have been locked out.
So right now, if I'm to understand, your investment portfolio is a mix of bonds, shares, some farms, real estate, and then now you're looking at sort of
Yes.
other bigger projects that you want to
Yes.
invest in. Okay.
I remember some of the money is saved in Form 2. That's when the Kenyan IPO was done. I bought shares.
You bought shares in Form 2.
I bought shares, I think, worth 20,000 shillings. So
Where did you find 20,000? Sorry. In Form 2.
No, I'd saved up a lot.
What's the extraordinary thing that you have done in your journey to allow you to build the portfolio that you have built?
You can do what you can with what you have. You don't have to wait for yourself to earn $1 million bob per month to say, okay, now I'm going to start investing in real estate.
All right, hey everybody, welcome back to Financially Incorrect. My name is Barak and I am your host. As usual, I have a money story that I am bringing to you. And before I begin, allow me to talk about our sponsors or our title sponsors for this podcast, and that is none other than FX Pesa. So if you've been watching this podcast for the last 2 years, you have heard the name, you know about FX Pesa. The link's in the description box. If you haven't at least clicked on the link just to check out who they are, then that's a great disservice you have done to this podcast. But anyway, please do check them out. Right? They have an offer that lasts. That's there on your first deposit. They give you a bonus of 30% up to a maximum of $250. So I'll repeat that. On your first deposit, they give you a bonus of 30% up to a maximum of $250. If you have some extra income and you want to invest or you want to trade in the global markets, please do use FX Pesa. They're perfect partners for you. Check out the links in the description box. They have many other things that they offer, many other services, including teaching you how to trade. And this is across Kenya, Uganda, Tanzania. Please do check that or links in the description box. So for today, before I actually get into our money story, let me see if I can read a couple of comments from the previous episodes that have gone out. And that would be, I think I did Carol's the last time we spoke. So let me look at Jason Runo's episode, which, to be honest, I thought, I didn't realize how long it was. First of all, after we spoke, it was 2 hours. So yeah, that was a lot. But he had a really interesting story. And if you have time, I think you should go listen to it, because he talks about moving from a place of plenty to a place of lack, to finding peace and just living a very different life, I think, from what many people are used to. And I think it would be an interesting perspective for anyone who just watch and just listen and relate to. So in fact, I'll read a comment here from someone called Kimani Samueli, who said, I thought this episode was long. Yeah, same. But that has gone by so far. Something that has stood out for me is Runo's approach to trying out ideas. He seems to have a way of creating a minimum viable product fast and testing it out in the market in a simple form, and an invaluable skill I should adopt as well, as I tend to overplan and analyze. We definitely need part 2. Great interview. Another comment was, thank you for the episode. I truly learned a lot and resonate with Jason. I have lived your life, only a different script. Great job. Another one is, this guy is really funny. I enjoyed the entire podcast. Yeah, he is. He's really funny. I mean, they have a whole improv comedy thing, BYSS, that they do. Last comment is, I really love this episode. Yes, traveling the world is cool on its own. I easily enjoyed this. So thanks for watching. And as usual, thanks for supporting the Financially Incorrect podcast. And now today, on to our story. Our money story for today comes from none other than Sheila Gatonga, who is the COO of Branch Microfinance Bank. Welcome to Financially Incorrect.
Thank you so much.
Before the podcast started, she told me she doesn't talk too much. So I'll do my best to try and make you comfortable so that you're not nervous, so that you can actually, share with us a bit more of your story. And hopefully it's not too intimidating.
Yes, thank you.
So to start off with, maybe you can tell us a little bit about Branch, or even before Branch. Maybe you can tell us, break down for me microfinance and all the other banking or financial options that we have. Yeah. What's the difference between them?
So right now we have a very rich ecosystem when it comes to banking, and it's even going set to change with the new regulations that have been passed by the central bank, with them opening up for more licenses for banks. So we are bound to see more entrants into the market, and even the existing players transforming some of their licenses to add on more products. We have the microfinance base, which caters to a different segment of the market. And you have the DCPs, who
What does the
exist,
DCP stand
the
for?
digital credit providers
Okay.
that exist. There are over 800, I think, right now. If they're the bigger players. Yeah, so we started out in the market being known for digital credit,
Okay.
but then we have transformed. We got our license in 2022, and now we're fully fledged microfinance bank.
Okay.
So what do we say? We are now more than a digital lender. We offer full services. We have your loans, obviously. Then we have savings. We have your account, which we call wallets, which is where you can do your day-to-day. And we also do payments. So we're a full service bank, only with some benefits. We, like I said, I think it's been mentioned, we're the only neobank in Kenya, meaning that there are no branches, which is ironic because our name is Branch. But we exist only on an app.
Okay.
And opening an account is as easy as taking a selfie and taking a photo of your ID. And that's all that we take. And then you're banking.
Okay.
So it's simple and easy.
So maybe I want to take you back a second. So even if you want to differentiate between the DCPs, like you've called them, I've forgotten even the word, what it stands
Digital
for.
credit
Digital
providers.
credit. Yeah. Between what makes you a microfinance? What are the things you need to meet to become microfinance and move from a DCP?
So you have a license from the central bank
Yeah.
to hold deposits.
Okay.
So you cannot hold deposits if you don't have that license.
Right. That's the biggest.
That's the biggest. Yes.
Okay. And so, and in terms of microfinance, what kind of person do you offer banking solutions for? Yeah. And I'm curious about that against vis-a-vis your lack of branches and only smartphone app access. Yeah.
So maybe to share information, anyone with a phone can download our app, and you can start your banking journey from there. So who do we target? Anyone with a phone. Yeah, anyone with a smartphone then can be our potential customers.
Okay.
And we've had customers as young as soon as you're 20 years old. We have 50-year-olds borrowing with us and saving with us. So it's very varied.
Okay.
Yeah.
There's a bad rep, I guess, that microfinance sort of has. I can't say that I've dealt with a microfinance institution before personally. What would your comments be towards that?
Yeah, that's a tough one because now I'm in a microfinance. I think there's been a certain perception that it's a certain type of person that goes to a microfinance bank. Like, why should you go there instead of going to a Stanchart, for example, or a Stanbic, and go to a microfinance bank? And I think the rep has been mostly because you assume you struggle. There's a brand or perception issue there. But at the end of the day, we are all lending. It's just that for us, we target the underserved as well. So we're not discriminatory. We will come to us as you are. We're almost biblical.
Right.
Yeah, come to us as you are, and you begin our journey. Your journey with us.
Yeah.
So it's mostly about trust and maybe previous performance. But for us, where we stand, we feel like that's the best place to be because first we're challenging the status quo. We are not physical first, we are digital first. Even in terms of our lending, we are leveraging very heavily on AI. Our vision is actually to be the biggest AI lender in the world. And we also make it very seamless for people to talk to customers, to talk to us. So we have 24-hour support. You can call us, you can email us. We reply within 5 minutes. Within 5 minutes.
Any inquiry.
Any inquiry,
Okay.
even saying hi, we will say hi back to you. That's how much we love our customers. So yeah, we're constantly there.
What does it mean to be the biggest AI lender? Because I feel like that's like a buzzword right now.
Yeah.
And I'm trying to understand, okay, so what does it mean? Does it mean you're using AI to lend money? Does it mean you're using AI to verify people's ability to pay back their money? What does that mean to be the biggest AI lender?
I think for us, it's entrenched in every single system, every single process that we have. If you look at our country, we are less than 70 staff lending to everyone. Our credit department is very small. And why do we have that? It's because we've leveraged on AI. So when you onboard with us, creating an account, we don't need someone there to say, yes, I saw him. That's him. He blinked. I told him to remove his hat. So when you take a selfie, we'll do liveness checks. We'll see, is this a photo of a photo? Because there's nothing stopping you from taking a photo of, let's say, Bruno Mars, and then you say, that's me,
Yeah.
right? So we use AI to check whether this is a real person. We use AI to check whether this is a live person. We'll use AI to also check whether the background is real and whatnot. So that enables us, even your ID, we don't need to see your ID to tell that whether it's real. So we've leveraged a lot on such things, even when it comes to lending.
So would it be fair then to say that that's more of like an internal like KPI as opposed to something that would be of benefit to a customer?
I think it benefits customers. You can say both. It's an internal KPI because what we'll do is try to make sure that life is easy, life is simple for the customer, and it's also transparent. Because when you don't have branches, you have to ensure that the customer really understands why this is happening, or if something is not working, why it's not working. So it does make life easier for the customer and internally as well, because we have to form processes. So if my team comes and they want to do something, then we'll think about how do we also make it easy internally. We don't want also to create clunky processes where someone comes, someone has to sign off. Someone has to sign off.
Yeah.
It's how do we make it as seamless and as transparent as possible?
Yeah.
So it's built in throughout on both sides.
Okay. Two final questions on this. The first one is, so I've heard you talk about wanting to give services to an underserved market. And so I'm relating that, like, I alluded to this earlier, to the fact that you live on an app. So you require a smartphone to be able to access Branch or any services that Branch has. And which then means that I need to be able to have data or access to Wi-Fi to be able to download the app or to be able to, like transact or speak to a rep or whatever the case is. So I'm curious about the thinking behind wanting to deal with an underserved market, the expense of data, the expense of a smartphone, and the penetration. How is that working for you guys as a business model?
Well, of course, it's a challenge, but what we've seen from the statistics is that this has been broadening, I think, with time. You can compare smartphone ownership in the early 2000s or in the early 2010s. My mind still doesn't figure out how
That we're
far
20
back.
2000 is 25
In
years ago.
2025, my goodness. So it has been expanding. Even internet adoption, it has been expanding. So what we do see is that, of course, there are certain markets that are locked out, certain segments of the market that are locked out, but we are increasingly trying to see how do we do that. So we've introduced a website where we can allow people who might not have smartphones to log in, but then for us right now, it's trying to see how do we leverage technology to serve the ones that are available.
Okay.
So we cannot hit 100% of the market, but for the ones that are there and they do not have access to banking services, then we are fully available and the products really are very suitable.
Okay.
Yeah.
And I like the fact that you talked about a couple of products because that's what I want. That's my last question, actually. And I'm referencing an interview or a bit of an interview that I watched recently, which was King Ori, Dr. King Ori, who has actually been here last year at some point, I believe. And he was having a chat with Abel Mutua, and he was vehemently against microfinance banks and talking about their lending rates and how high they are and how high the interest rates are. And he would never advocate for anyone to, sort of work or leverage or take loans from microfinance bank. So I'm curious, what are your sort of lending rates or your procedures? Because I mean, he was talking about, I think if I understood him correctly, the ease that microfinance banks have for people to be able to borrow money from them, but then the high interest rates that people have to give back. So I'm curious about the products that you guys offer and what that, I guess, response to that is. Yeah.
Wow. Yeah. Oh, I'm calling out Dr. Kengori. Never thought I'd be here. But I think we lend a lot to individuals. So that means if someone has a need and you come to us, we'll take maximum 5 minutes to help you out in that need. I think our marketing team, our customer operations and our marketing team led a project to just figure out who our customers are and how have they benefited from our products. And we've seen that most of them are really not just taking for their own personal needs, they're taking the loans for their businesses. So we also rolled out business loans. So these loans are from 300,000 to 100,000. So what you'll see in the market is there's a lot of capacity for established businesses. So you need to provide like a business plan. You need to show us what your annual turnover is like. You need to show us who the directors are. Are you registered? But you'll find in Branch that you're actually funding your local mama kibandaski.
Right.
Yeah. Where do they get funding from? So those are some of the things we need to question. So you might say it's expensive, but I know our rates are very favorable, and it varies from person because we do credit scoring, and the credit scoring is based on you as an individual. And what we'll do is enable you to achieve success. So you'll find we have merchants who are at pipeline. And what do they do? Some of them have kiosks. Some of them are selling outside in the market. They sell vegetables. Who enabled them? So I think sometimes from your perspective, I think it depends on where you are in life. Because I'm sure that people will tell you, don't take your child to this school. The teachers are not good. But is that an option that is even available to you?
Right.
Probably not. So what we are doing is providing access to funding for many people who have been locked out of the population. And what you'll find is, and even maybe from your own experience, is that as you grow older, people expect you to have figured out what you're doing in life. So you can borrow money from your siblings when you're in uni. You'll tell them, I need 1,000 bob. At 25, yeah, you can, but there'll be judgment. At 30, if you're still borrowing 1,000 bob, there's major side eye.
Yeah.
And things are not always like in a straight line trajectory for everyone. If they have been, then perfect. Good for you.
Yeah.
But there are people who need help in one way or another. So that's why you find even in terms of our customer segments, it's not the young guys only, because there's this assumption that digital anything is for young guys. But we're seeing everyone across all generations, and that's because you have a need. You need to pay for school fees. And life is hard. Prices are going up. How do you pay for these school fees? So we are meeting people at their points of need.
Okay. I mean, I think that's a fair response. I mean, I think unfairly go down that road and talk about, rates vis-a-vis whether it's like a market rate or whether it's a bit predatory to some extent, but I don't have the knowledge and I've not done enough research to be able to sort of come back at you with that. So I'll leave that there. And I think that's a fair response to the question. So I guess now to your sort of personal story and your financial journey and how you even ended up here. What does money mean to you, I guess, right now?
Oh, wow. In this economy, it means a lot. It means, accessibility. It's essentially life. There's no way you can live without money.
Right.
It opens doors and it gives you that security.
Yeah.
Yeah. Money transforms you. You move from one place to another. Where you used to clutch your handbag to where you put it on a seat next to you, to where you don't even think about it. So money is interwoven in every aspect of our lives. So for me, it's something that I've been very careful about in my life because growing up, we didn't come from a very good background. I think compared to others would say I was privileged, but it's all about perspectives.
Right.
Yeah, but it's something that I saw even growing up. My parents were very careful about money, and I think that's something they instilled in me as I was growing up.
Why is your definition not a good background? Like, why is that? What about it makes you say it wasn't a good background?
Well, I saw how hard they had to struggle. So my parents were both employed at some point, and unfortunately, they both got laid off at the same time. And I remember eating dengu like every single day. It was either ndengu gali, ndengu rice. Then at some point, the rice ran out, so it was ndengu gali, ndengu gali, and carrying it to school in the morning. And you know, when you're seated in the playground with kids are mean, and it's not from a place of bad intention. They're just stating observations. Yeah. So I remember someone saying, "Yeah, you guys like ndengu," and I remember even in my house, it's taken a long time before we ate ndengu.
Like
But
now, as an adult,
yes,
it was a traumatic.
it was the traumatic food.
Yeah.
Do people say chapati and dengu slaps? No,
Yeah.
it
No,
doesn't.
It doesn't for you. Okay.
Yeah, but then also the whole aspect that you can see your parents are actively saving for school fees, and it's in a public school, and public school not now, back in the day where school fees was like 400 per term. So you see those struggles, and it kind of triggers something in you that you know that you can't mess around with things. If you're in school, you better be in school. You don't want to struggle later. So I think it's that having and coming from an African household where even those parents you're seeing are struggling, they are the kings wherever they are from.
Right.
People are looking up to them. There's that black tax element. So I grew up around a lot of that.
Yeah. Did your parents ever speak to you directly about your family financial situation?
No, I would say no, but you could see it because my parents were employed, but they ran a lot of side hustles. My mom used to sell milk. At some point, she was selling groundnuts. At some point, they had a shop where we had to be after school and over the weekends. They had a boutique for selling clothes. And you are tasked with, running some of these things. So I remember one time during in the clothes boutique, someone came and it was my mom's friend, and we were like, "Oh, auntie has come to buy." You know, when you call everyone auntie, your neighbor, the shopkeeper, everyone is auntie as long as they're older than you.
Right.
And I remember giving them an outfit, and they wore it and went. And then
They didn't pay for it.
They didn't pay for it, but we knew her. We knew where she lived, so I thought that was enough guarantee. The next Sunday, we still saw her going to church in those clothes. And my mother would look at me and tell me, "Look, you gave away clothes." So I think that was a big lesson where you go like, this outfit, this skirt is a difference between us buying meat on Friday and between us eating dengu again. So you quickly learn that it's not of abundant resource. You need to really watch.
Yeah. I mean, what did that sort of experience or ecosystem that you grew up in, what did it do for your money ambition? And when were you ever conscious about the role that you wanted money to play in your life as an adult?
So I think when things got better, my parents started introducing allowances. So we'd get 10 bob a day. 10 bob back in the day was a lot. And I don't know, I don't think there's anyone in this room who is from my generation.
You'd may be surprised.
But 10 bob was a lot. 10
You'd
bob,
be
you could buy
surprised.
5 bob chips. 10
Okay, 5 bob chips that are now. Okay, okay, that's a different generation.
10 bob was a soda,
Yeah.
softer. 10 bob was a lot.
I remember 15 bob soda.
Back then it was
Vim
10
too.
bob.
Anyway, okay.
Yeah,
Yeah.
so there was a lot. 10 bob was a lot. And I remember that time I was like, you know what? I'm going to eat bread every break time. I won't buy. So I lumped up all my money. And at the end of the time, I had a lot. I think I had over 1,000 shillings. And I remember thinking, oh my God, I'm so rich. What should I do? So I was like, I'll buy my baby brother a bike. Which obviously didn't, but someone topped up.
Yeah.
It wasn't that far back.
Right,
Yeah,
right.
so someone topped up. But it gave me this sense of pride that, look, out of this saving, I'm buying joy. So what else I did? I was very good at art. I used to draw a lot. There used to be these Batashu Shine competitions.
That I remember.
Yeah.
Yeah.
Took part in all of those. I remember
Did you ever win?
Yeah, once.
Do you know, I used to be so jealous of the kids who do those composition competitions
Yeah.
and then by the Bata one and the ones who'd always be in the newspaper in the young nation and anyway. That's like
So I
yeah.
did all of those ones. So I remember winning one for Citibank for a Christmas card. I won 12,000. I also bought lots of stuff for my brother. Wherever he is, he should he should buy me something one of these
Yeah.
days. Yeah, and saving all that money. I wrote compositions also won. So I could see that there was a direct correlation between my work and the financial aspect of it. So I knew, okay, work hard, take a risk. Even if I may not win, just put in that effort and there might be some reward. So that's where I started. I remember some of the money I saved in Form 2, that's when the Kenyan IPO was done. I bought shares.
You bought shares in Form 2.
Yes, I remember asking. So I bought them through my mom. So
Okay.
she created an account for me. I bought shares, I think, worth 20,000 shillings. So it
Where did
felt.
you find 20,000? Sorry, I'm
I,
in Form 2.
no, I'd saved up a lot. I was very frugal. You know, when you're given money by relatives, I never used to buy anything. I just used to say, I'm just waiting for the right thing. I'm just waiting for the right thing. So I'd keep that money. And then when I heard about that, I'd read in the newspapers, you know, when you'd see on TV, people have become millionaires. I knew I was going to be the next Warren Buffett. So I gave my mom and I was like, buy me shares. So she bought me shares and really paid off because in Form 4, when I got my money back, which was awesome.
How much did you get? You got your return 2 years later when you're in Form
No,
4.
she kept it for me, kept
Okay.
reinvesting for me. But I remember I think I'd gone to close to 60K with
From
the
from the
yes,
20 initially.
from the 20. So it paid off
Yeah,
directly,
I'd say.
which was awesome.
Yeah.
So I learned a lot. And I think even that responsibility aspect, my parents could see, okay, so she kind of knows what she's doing. So I remember my dad took a risk when I was joining uni. And he wrote a check for all my 4 years for my school fees. And he was like,
He gave it to you.
yeah. So I was like, what do I do? Do I keep it? Do I go cheza with it in the market?
How much was it? Do you remember? I mean,
Like,
assuming you went to University of Nairobi.
yes, which I
Assuming.
did.
I think that when I was there, I think their semesters were 100,000 for the first semester,
I know it wasn't that much. Back in the
75
day.
for the second.
I think he gave me around, was it 180K?
In total.
Yeah, in total.
Okay.
So I was wondering, do I put it in my account? My first account had 0 bob. And my pocket money was like to the cent. This bus fare, if you buy chips on a Sunday, it's 50 bob. So tomatoes was 5 bob. It was that. Yeah, but then I just decided, let me just put it all in school because I didn't want to play around with it. And I think it's good because some people dropped out, you know, when you're in second year where you're given money, you go spend it on other things. So that's the one piece, one part of my life I'm happy I didn't take a risk with.
Okay.
Yeah.
Looking back now, actually, there's 2 questions I want to ask and take you back a little bit. It seems like your spending habits, at least that early on, you're either saving or spending on your brother. Are you a firstborn? Is he the lastborn? Because it looks like all the money you are making, it's either you're saving it or buying him something.
I come from a blended family.
Okay.
So I would say I'm a firstborn-ish. Yeah.
Okay.
I have a firstborn.
Okay.
But I grew up as a firstborn because we have very big age differences between us. So at some point you're like an only child. The age difference between myself and my brother is close to 12 years.
Oh, okay.
So he's really small. He was my baby. So, and my elder sister was, the difference is 18, 19 years. So
Oh, wow.
she was basically out of the house
By the time.
my brother was born. So,
Okay.
yeah, it feels like I'm a firstborn.
Yeah, I get
Yeah.
what you mean. Okay. And the desire for just to buy him stuff, is that the baby brotherness? And has that extended to now or has that changed?
No, he's a great guy.
Yeah.
Yeah.
So you still buy him stuff?
Not all the time. He also buys me stuff.
Yeah.
Yeah.
Okay.
But he's a great guy.
Okay. All right.
Yeah.
So that was the first question I wanted to ask. Then the second one is, with the finance knowledge you have now, or with, because I mean, we'll talk about your career history, but the finance knowledge you have now, when your dad gives you that check, if you could do things differently, would you?
Yeah. No, I'd still invest in education. I think for
Okay.
me, that's the one thing I'll always have. It sounds like a cliche when people tell you, you just read. I don't think you can ever go wrong with it. At the end of the day, it might be just a piece of paper, but it's something that opens doors.
Yeah.
You can't run away from that aspect. So I'd still invest in my education.
Okay, so I get that, but even if I'm to consider your own buying of Kengen shares in Form 2 to Form 4, them times 3, 3x within 2 years, would it not have been a thought to be like, let me pay for the first year, I'll invest the money for the other 3 years, and keep taking it out as that sort of earning interest or whatever as you're moving forward?
I know how life happens. There's some things I don't compromise on. And some of it are, for example, my savings. Whenever my salary comes, I just move some out immediately. Because I know if I keep looking at it, if I have access to it, I won't know where it went. I do not compromise on my kids. So if there's something that my kids need to have, I will plan for it. Or my husband, because you have to give him priority too. So there's some things I do not touch
don't take
on.
that risk.
Yes,
Okay.
I don't take that risk on. But there's room for risk with mitigation. So whatever I have allotted for playing with is what I'll really play with.
Okay.
Because at the end of the day, I don't want to be at net zero. I've been there where it's zero, and I do not want to go there. So I could say fear drives me, that fear of poverty. I do not want that Ndengu thing again.
Yeah.
But I'm doing it responsibly now.
Okay.
Yes.
All right, interesting. So, okay, so now we are at, I guess you're getting through uni. You've paid your uni fees. You're sort of, I guess, doing your pocket money and all of that. When do you get into your first job and sort of first payment from you offering your services as an employee or as an entrepreneur? What does that look like?
I think the biggest thing for me is I thought you needed to graduate with a first class. So worked my butt off because I thought if I do that, then that corresponds to my salary, that corresponds to life. So, and then you come out and you realize people don't really care about it. It's like,
Do they not?
they care when they're recruiting when it's a first hire, but after that, no one cares.
Okay.
So I worked my butt off, and I think when you're younger, you're more altruistic. You're like, my goal was to change Kenya, which I'm doing, but in a different way. But I wanted to be in government. I wanted to work for the Ministry of Finance or Treasury. And that's where I started. I really knocked on many doors for about 2 months. I would just talk to anyone who
With your
wanted.
first class?
Yeah.
Okay.
Yeah, I'd talk to anyone who could listen, knock on doors and say, I want a job here. How do I get it? Who do I need to talk to? And I ended up working in the Ministry of Finance, the external aid department, which was an internship. But I was like, this is where I want to start. I want to start from here. And then maybe one day I'll rise and I'll make an impact. I'll do what projects where. I got there, and the letter that I got was, yes, you've been confirmed to this role. Do not expect any remuneration. And it was in bold. So that salary was zero, but I would still show up to work every day. There's a lot of good work that was being done, but I think there is when you see, oh my gosh, things don't run the way you expect them to. This project is not being implemented 100% the way it should. Let me just be politically correct.
Right.
Yeah, so I think that's the point where I went, let me just go into business. And that's the point where I went to Citibank.
Okay.
So I was doing credit risk for Eastern Africa, so Kenya, Uganda, Tanzania, Zambia, and then sometimes you'd double a lot around Sub-Saharan Africa. So I did that for a couple of years, sometimes based in Kenya, sometimes based in South Africa. So enjoyed that quite a bit. It was a good experience because you work with people from different areas. You have to learn. When you start working, there's some things you can't be taught by someone, that this is how you show up, This is how you update your manager. This is how you should look. This is how people like projects. So I learned a lot about workplace etiquette, how to manage myself, how to manage upwards. Because when you're working, it's important to also manage upwards. And I think that paid off because every year I was getting promoted. Every year. So, and it's despite not talking a lot.
Yes. Right.
Yeah, just getting the work done and by knowing how to speak to people elsewhere. Then I think after some time, when you're working for a subsidiary, you realize that you can't really change much. So orders coming from New York, we implement them. You don't talk to you why did we change this from X to Y? You know it makes sense, but there's no real call out for yourself to put your input in it. Yeah, so I wanted somewhere where I had a bit of control, and yeah, that's when I moved to Jumia.
Okay. So how long did you spend at Citibank?
About 4.5 years.
Okay.
Yeah.
And what was the remuneration like at Citibank? I mean, moving from
No
no
remuneration.
remuneration in bold. Yeah. And vis-a-vis the promotions that you were able to get.
Oh, that was fantastic. Oh my goodness. Because I remember that time I was interviewing for 4 different companies. I was interviewing for Deloitte, PwC, KPMG, and now Citibank. And I got offers from Deloitte, PwC, and Citibank. And I remember at that point in time, I didn't care what I was doing. I just wanted to see how much are they offering. I remember PwC did 85K and City came in with 100K. And I was like, wow.
And this was in what year? So that I have context for what that 100K is worth.
Like 2011.
2011. Okay.
Yeah. So it was 100K. And I was thinking, my goodness, what will I do with this money? 100K, can I finish it in 1 month?
That was the only consideration for you between these 4
it was
offers.
just like from there I'll figure it out.
Yeah.
But I just wanted somewhere with the most money. And it was very exciting. Because one of the things I wanted to do was when you walk down Moy Avenue going to the bus stop or going home, you would look at the windows and you see those chickens.
I can't say
Kukupono.
Yes, the kukupono. Yes,
and I remember telling my boyfriend, now my husband, that one day when we get a job, we'll buy one.
And we finished it.
And we'll finish it. Yeah. We still have never bought one.
Wow, okay.
But I remember that was one of the goals.
Yeah.
And then we were like, we'll go shopping for clothes so that we look the part. Yeah, but it was exciting, 100K.
Yeah. I mean, can I say something about what you're talking about, first class or having a first class degree? I do think, I mean, as someone who did not have a first class degree, at least my first degree, I do think it makes a difference. Like you're saying, at that recruiting stage, to be offered opportunities, or whether it's to interview or actual job offers from top firms or top employers. And I think that does set you up for something. It does give you, I think, a bit of well, it's not a leg up because you've worked for it, but I do think it sort of gives you sort of like something. And I don't think it matters as much as the masters, like having a distinction at the masters level. I think the first class one is one that really makes sense, or like really matters to people. But anyway.
Yeah, I wish it came with a bonus, but
it came with a bonus as well.
No, it doesn't.
Yeah,
I wish it did.
Oh.
But yeah, it does make a difference because it shows your work ethic.
Yeah.
Yeah.
Okay. So how did you? I mean, through your promotions, I guess, whatever you're comfortable telling us, what was the remuneration increase like? And then at that point in time, what are you then doing with your money? Do you then move out immediately, or are you still staying at home? Did you have a plan? Because I know that there are people who are like, I will move out when I commit into a long-term partnership, and up until that moment, I'm going to stay in my parents' house. Was that your plan as well, or was it slightly different?
I would say my journey is very different. I wouldn't say it's unique, but it's very different. I know one thing I did was I got married very young. So I got married in 2012.
A year after you started?
After graduation.
Okay.
And my husband was, I think, in 4th year when I joined. So it was that Kutoka na fresh. Yeah.
Ponyoka na fresher. Is
Yeah.
that what it was called? Yeah. Right.
So that was kind of the setting. And I remember he first proposed to me when I was in second year.
He first proposed to you. So there were
Yes.
multiple proposals.
No, what I would say the first one was, and I remember he was like, hey, we had gone out someday and we were hanging out, and then he was like, you know what, I'm gonna marry you. And I was like, yeah, sure, dope. Let's go through this. And we always knew that was on the decks. We'd seen older siblings go through it, cousins go through it. And so the plan was, let's do it when people have zero expectations of us. Like it could be you get married and you go sit under a tree and you give them cake and soda and everything will be okay. Because we'd been in weddings that were like over 1 million shillings. I think sometimes there's a benefit to being young. No one really has high expectations of you.
Yeah.
And I remember the first question was, are you pregnant?
Yeah.
And you could see why do your masters first. And we're like, okay, no, we know what we're doing, so we'll go ahead. So that's what we did. We saved up after uni and we got married a year later. And so
So what was your wedding budget then?
like 600K.
600K. That's still, I mean, it's a lot of money still. I mean,
It's a lot of money, but
I mean, even then, 20, still a lot of money.
yeah.
Anyway, yeah.
Yeah, but we saved up quite a bit.
Yeah.
And then that's now what the trajectory was like. But what we knew was we just wanted to continue this friendship. And then now what we did was commingled our money. So it was your salary is purely for investment and ours is day to day.
Okay.
So it would be food, transport, who's paying for rent, and then your money, you're not touching it. We are just going to invest all of it. So all the money would go either to the current account or savings account. So savings account as we decide what
Where
you're
to
going
invest
to
in.
do. Yeah, with it.
Okay.
And that's how I feel that really stepped up our game. Because sometimes when you're alone, there's only so much you can do.
Yeah.
It was like being in a chama, essentially, where
Right.
someone is doing things. And having that focus really helped. Because when getting our first car, we shared one car for a long time. And remember getting asked questions, you can't afford two cars. Like, no, we're just running our race.
Right.
And that has really helped. Because I
Okay.
think in 3 years, we had bought a house. We paid it off after a while. We bought a second car, but now in cash. Yeah, so a lot of investments along the way.
So what did that, I mean, what does the reality of that look like where you're living off of one salary alone? Like what are because it sounds good in theory, but what are some of the more difficult day-to-day decisions you're making that would allow for you to purely invest the second salary?
You sacrifice a lot. So I know most people, when you get your first job, you go out raving all the time. You do your travel. We did travel, but is there a budget offer somewhere? Is there an offer running? Or we can only do it twice a year or once a year? Do we have to fly? Can we drive? So there's a lot of that. And it helps because we both come from backgrounds where we didn't grow up with a lot. So it was easy, I would say. It's a lot easier when you know these are your means.
Yeah.
And it helps you choose better options.
Yeah.
So even where to live, do you need to live in Kileleshwa? We lived in Parklands at that point in time, which was lucky. We got like a 2-bedroom at 30K. And that was a steal. So like, how long do we live here? How much do we need to save up so that we don't go into another house? We get our own so that we now start building assets. And one of the reasons we did that is because we wanted to buy land. And that time we looked for loans everywhere. And no one wanted to give us a loan. They're like, do you have collateral? We had nothing. And they were showing them, this is our savings. And no one wanted to see our savings. Guys were like, okay, you either have collateral or we give you at this rate, which was much higher. So we're like, okay, first step, build collateral. So that's how we started our journey.
Okay. And what about the discipline to only live on one salary? Because, of course, things come, And of course, expenses or potential things come. So how did you guys keep that discipline of no, we are genuinely not going to touch?
You don't have access to it. Just limit your access to it. And then having that savings account, we didn't have a card. So it meant that
You have to go to
you
the
have
bank.
to go to the bank. So accessibility, by the time you talk yourself to go to the bank and withdraw, you've asked yourself many questions and you go back and continue with life.
Yeah.
And then that current account, we had access to both. Both people could have access to it. So it was like if you're at a dinner and you need to pay something, you're not broke. You'll pay. You can buy someone a drink. You can buy yourself a drink.
Yeah.
But it was more of, it has to be really intentional spending.
Yeah.
It can't be, oh, that looks nice. Let's go try it out. No, it was, we've planned. We are going for coffee. You know what you're buying.
Yeah.
Yeah.
Okay. How close did you get to that walk to the bank? To what's the closest you ever got to removing money from the savings account?
Many times.
Yeah.
Peer pressure comes in quite a bit, where you see people are doing things, you're like, why not? Why not me? But then you have to constantly remind yourself that this is where we are going, and also having someone who's more of your accountability partner. Thank God that pressure didn't happen to both of us at the same time, because
So it would happen to one when the other is stable. Okay.
Yeah, so you'd call yourself kwa mkutano,
Yeah.
and then you ask yourself questions. So that really, really helped.
Okay. So, I mean, you've talked about buying a house within 3-4 years. Are you able to talk us through how that was achievable, or what you were able to do? I mean, I think based on what you told us from your career, you'd still be at Citibank at the time when you get your first house. Yeah. And I think moving from a rented house as your first house into a house that you're working towards owning, I think that's incredible as well.
So it was on Kiambu Road. At that time, it wasn't as hot as it is right now. So people would be like, gosh, that's bundus.
Yeah.
And then it would be like, and then you'll come to work with red soil. You know, that was that was a diss in itself. It means you leave mashinani.
Yes. Yeah.
But I would say it was worthwhile. Looking at houses, of course, at that point in time, people were not taking us seriously. You'd go see agents. They don't even open for you the house. They tell you, come on Monday. And obviously you can't come on Monday. You're employed. And then the ones who show you the house just open the door and they tell you, just walk around, look at if you like it, okay. So we had a lot of that attitude coming through. It wasn't like, I think now people are more used to younger people investing. At that point in time, they didn't. So you'd go see things and they don't take you seriously. Or maybe we look like babies, but they don't take you seriously. They don't show you the house. Sometimes you just see someone there with the keys and they're like, tumetoka. So we had someone who showed us and we liked what we saw. At that point in time, it was the show house, I think. No, I think they were mostly built. Yeah, but we went through it and it was good. And that's how we ended up with our house.
Okay.
Yeah.
So you used the savings that you'd been putting together
as a
deposit.
Yes.
And then do you have to take a facility, or are you just paying now? Or did you now, instead of putting your savings, your money into a savings account, you are now paying for the house?
So we converted the rent into the mortgage. So we're still saving because we want to prepay.
Okay.
And we ended up prepaying.
Okay.
Yeah. Okay. That was the whole plan because we wanted collateral. So that the next time we go looking for the next big thing, we can see collateral. And I think for me also, you want to be in a place where you're not worried. And I say some of these things come from past trauma. That poverty aspect really stuck, where you never want to go back to that point where you're thinking, will I be kicked out of my house? At least there we had some sort of security. I was comfortable that at least I have my own place.
Yes.
And it comes with some kind of good feeling.
Yeah.
And obviously at that point in time, property rates were really appreciating.
Yeah.
So you'd buy a house at 11, but selling off, I think we sold at 25.
Okay.
So it was very good return.
Okay. Oh, you sold that first house?
Yeah.
Okay.
Well, more than double
of what you paid for it. All right. So, I mean, and you've talked about using that house as collateral for the next big thing. So what's the next big financial thing that you guys do?
So it's diversified, really diversified. We have farms, There's something we are in the process of building, like hotels. You have your own home. You have investments like in stocks, bonds. We have savings with Branch. So it's very diversified now. So the thing that has worked for us is that still, for me especially, is that joint aspect, because you're able to still channel most of the earnings into investments. So it's more of you're not changing your spending quite as much and you're still investing as much as you can.
So has your formula not changed all this time, where you still live on one person's salary and the second one purely is for investments and savings?
Mostly still living on one person's salary.
Okay.
Yeah.
Okay.
It helps. Of course, the formula has changed because now with kids in the mix, then your expenditure changes
Yes.
a bit. Yes.
Okay. So anyway, so let's go back now, I guess, to the career, right? So you said you sort of get frustrated with Citibank to some extent because of you're dealing with orders coming from overseas, so to speak, and you decide you want to move somewhere else, and so you go to Jumia. So what's then the Jumia process like, and what does that do for your salary and what you're earning at the time vis-a-vis what you are leaving at Citibank?
For Jumia, I left at the exact same salary.
Okay.
Exact same. I didn't get a raise.
Okay. So it was lateral.
Yeah, it was a lateral move, but it's just that I wanted to experience something out of finance. And I would say it was very rewarding. It was at the early points, not the way it is right now, where your hands were getting dirty. At that point in time, the orders were very few. Think about 115 a day. By the time I was leaving, it was more than 1,000 in a day. And it was, you did everything. You're picking up calls from customers, you're delivering TVs one day, the next day you're at the warehouse. I found that very exciting. I liked that life. And what more, I felt like my impact was more direct and my voice could be heard. So it also changed my outlook quite a bit. I think our education system, 844 back in the day, was more around, if I give you orders, how fast and how well can you execute them? And then also culturally, you don't talk back to people in authority. It's, you come and tell me, Sheila, do this, I will do it. I won't question it. I'll just go like, oh, that's a dumb idea, but I'll do it because you must know what you're talking about. That's the first place where someone called me out and they're like, but why are you doing that? I was wondering, why are you asking me? See, you're the one who said I should do it. And it made me think that my opinion counts. And then coming from a place that, yes, you're handling sub-Saharan Africa, but it's people like me now going into a place that's very culturally diverse, I would say. I don't want to say white people, but culturally diverse. Then you realize people talk. An intern can say bullshit in front of the MD and you're like, you're clutching your pearls.
Yeah.
And nothing happens to them. People say, oh yeah, he has a good point. And it's shocking to your system and your belief system. So that helped me in also getting that confidence that, so my brain it's not just Uji inside there. I can actually produce good ideas and I can question and my voice can be heard. That really helped me.
Yeah. Okay. And if you can give us a range, so because I'm also trying to sort of understand how you're able to achieve some of the things that you're achieving on a financial perspective.
So I know after 3 months, I got a raise.
Okay.
Yeah. So, and then I think in another 9 months, I also got another raise.
Okay.
Yeah.
Are you in the 300 to 500 bracket? Are you above 500 at this point?
That time I got into 300.
You got into about 300.
Yeah.
Okay. And I'm trying to understand also, because I want to correlate this with the journey of the house, of when you, because we know you've bought the house at that point. I'm trying to figure out at what point you then sell the house. After how many years do you live in the house for you to then be like, okay, now we can sell it?
It was about 6-7 years.
About 6-7 years.
Yeah, because at that point in time, we didn't have a need. It was just 2 people. You hear echoes, and it's okay. It's the point where now I got pregnant. Then you're like, yeah, maybe we need space. We want to grow our family. I know one thing I was very deliberate about is when we were to have kids. Yeah. The reality on the ground is for most women, your career stagnates. And you don't want that happening very early on in your career. And I know even when I got married, I was called in and I was asked, so I'm assuming you'll go for maternity leave in 9 months. and you sit there and you have all these sorts of responses in your head. And what you say is, no. And it feels very intrusive talking about such matters in a boardroom.
Yeah.
So it's a question that carries along for most women, especially when you get married, as if you can't get pregnant when you're not married. But it's something that that comes up quite a bit, where people expect you to go. So at some level, yes, it's a level playing field, but there's this expectation that you'll take off or your performance will go down, which is usually not the case.
Yeah. I mean, and what did that decision allow you to do financially? What did delaying your pregnancy intentionally or delaying your ability to get pregnant intentionally allow for you to do financially?
Financially, it also, I think, it helped me mature. You can look at a 23-year-old and assume the same mindset, the same decision-making ability is the same thing you have at 30 or at 40. There's still some growing up you need to do. And people grow at different paces. And I think it allowed me to grow and figure out who I was. I think the biggest thing is you come from being a student, then you start working immediately. Then you realize, oh, working is an everyday thing. There's no end of term somewhere. So just figuring out what do I like, what path do I want to take. Then as you grow in that, even career-wise, then you also plan better. Like, I want this kind of life for my kids. I want this kind of life for myself. I want to become this in 5 years. I want to become this in 10 years. So it helps you become more mature to make more responsible decisions.
Yeah.
Yeah.
So what financial milestones had you met then by the time you guys were then getting pregnant and then and growing your family? What did you get? What sort of assets and things did you guys have by that point?
For assets wise, I think we were comfortable because we had the house, the cars. It's more of savings. Because one of the biggest experiences, and I think in most Kenyan African families, is that one health crisis can wipe out everything. And it kind of happened to us with a close relative where someone very close to you gets unwell. And, before you even call people for fundraisings, you need to have done something.
Yeah.
So we needed to prepare for that eventuality. So we had wiped out some of our savings, quite a significant. So we had to start rebuilding. And then even personally, knowing that we all pray for health and healthy children, but it's not a guarantee. So having that buffer. So we wanted to get to a buffer before you can say, okay, I'm ready. Otherwise, you start asking people for a few coins, they ask you, well, was I there? No, you don't want those questions.
Right.
So just ensuring that I had money, I had access to that. If anything happened, that 6-month buffer for your savings in case there's a layoff, can you afford everything? So having that 6 month built up.
Yeah.
That was important.
Okay. All right. I mean, I think that's commendable if nothing else. And okay, so if we sort of move on to, I want to go back to what having collateral allowed you guys to do, because you then talked about different things you've invested in, building hotels, etc. What, if you can try and surmise for us, what having this collateral for this house allowed you guys to do financially moving forward, and what allowed you to invest in and get money for?
It was a lot more easier getting money for things. And then when you list other assets, sometimes you don't even need that collateral. You can just get it cash basis. The reality is sometimes when you have a lot, people give you some things for free.
Okay. Can you give us an example?
So there's this farm I really wanted. I wanted something with a view. I wanted something, I don't know if you've watched these movies, the Hallmark movies around
Yes.
Christmas,
Yes. Yes.
where someone lives on a farm and whatnot. I wanted that kind of vibe, and also something very income generating. And I remember saying, yeah, I need that. And going to a bank and saying, yeah, we have collateral. And they're like, no, we can just give you at this rate. And it was a shocker where you're like, for most of your life, you had to present, like, this is what I own. I cannot default. This is my history, to a point where people are just, yes. I think for me, that was a huge milestone.
And I mean, by that point in time, what had you accumulated that I guess the bank trusted you and didn't think twice about whether you could pay it back or not? Yeah.
I think it's a portfolio in terms of stocks and bonds and whatnot. And then the house, there's another farm, so they see that you're very prudently managing the resources that are available to you.
Okay.
Yeah.
I mean, it seems like, I guess, out of the career space, you've been able to build a really solid portfolio. Yeah, I guess you and your partner, your husband. How much deliberate effort did it take to work on like the portfolio? Was it like a separate job that, it's almost like a third job that you guys had and were very intentional about it? Or did it just like passively grow? And then you'd accumulate money and you're like, oh yeah, we'll do this now. And accumulate more money and you're like, oh yeah, we'll do this now.
We take it very seriously. Anyone who's worked with me knows I'm very detail oriented and I'm very structured. I have spreadsheets on all aspects of my life. If it's events for the year, for school, for my personal life, and now for investments, we have meetings at least once a month. It's not a date, it's a meeting.
A business meeting. Yeah.
Where we go through the balance sheet. And this is where, what are we supposed to have done? Come up with action plans and action items that you need to have achieved by the next monthly meeting. And then you'll have your annual meeting where you go like, this is what we achieved. This is what we are yet to achieve. We need to take more risks. So it's very structured and very intentional. It's not a by mistake.
Yeah. Was it always that way, or has it become that way with more assets? Like at the beginning, when you were talking about getting the house in Parklands, was it at that level where you have your monthly meetings at that point? Or once you accumulated more assets is when you're like, okay, we need to get a bit more serious about this?
I think it's my personality, and he's also very intentional. But it started with wedding planning, where our committee was just me and him. So we'd sit at some chips shop in town and we'd go through the spreadsheet. Like, this is what we need to do. This is and then, so we just converted that, created a duplicate and said, these are the things we're looking at. So did you overspend on fuel? What did we do wrong? So it was like that. Because most of the times it's those little things that add up. And it's not even about the amounts, it's about the behavior. So what behavior are you building? So yeah, we've always been serious about most of the things.
Okay. I mean, it definitely sounds like it. Tell me, you mentioned the hotel. I don't know if I had my own things or you mentioned the hotel.
No, we just mentioned it's something we are coming up with.
Something you're coming up with, like you're planning to, it's something that you guys want to invest in.
Yes.
So right now, if I'm to understand, your investment portfolio is a mix of bonds, shares, some farms, real estate, yeah. And then now you're looking at sort of other bigger projects that you want to invest in. Okay. So it sounds like, based on the structure and everything, you had a really good plan, right? In terms of how you wanted to manage your money. You said you still largely live on one person's salary, albeit expenses for the kids. But, and this I quote him a lot, Gishuki Kahome, who was here before, and he said, money management is like playing defense. At some point in time, you need to attack, like you need to make more money. So my question now is around your ability. What did you guys do to allow you to make more money? Because we've understood the annual elements of budgeting and planning and meetings and being very deliberate. But now how, because you can do that, but you're still earning the same 100,000
Yeah.
shillings or 300,000 shillings. So how did you guys work on just making more money and being salaried, so to speak, and not
Yes.
entrepreneurs?
It's a challenge.
Yeah.
I think it's about how you view yourself. And one thing I decided early on is to view myself as a consultant. So I'm a consultant because I'm bringing a certain skill that is useful to an organization. And where I feel that I have implemented what I can, then I move on to my next challenge. So that's how I look at it. When I join whatever organization I join, I usually make a list of, from where I sit and where I stand, these are the things I want to have achieved. So if I walk into a place and I notice the processes are manual or X and Y is not working as it should, it will be one of my goals. And then also beyond the organization, I can see this is where the industry is shifting to. Can I achieve this? So I'll go checking on each of those items. And once I check those items, then I go like, okay, so I feel like I've offered what I can. Maybe it's time for me to offer space to the next person. So sometimes it happens within the organization, sometimes it happens outside the organization. So for as long as I view myself as having been contracted to improve something and to improve myself in the process, then it gives me that mindset to keep growing. And then it helps me grow in terms of my skill set, my perspectives. And having grown that, even the next role offers more. It's never, there will be no remuneration. It's, you get
Yeah.
something in return.
Okay. I mean, and you sort of touched on it at the end, but I wanted to see if you could make a more direct correlation between that and your ability to earn money, because especially as an employee, because you have to have a conversation with an HR department or a boss and
Yes.
be like, I think I'm worth X amount. And I guess I'm curious about, through your career span, how you've been able to move up your salary scale to allow you to do some of these things. Yeah.
I think my first experience getting my first job, I didn't even negotiate. I didn't know you could. I thought, wow, if they've given you 100,000,
That's it.
they've really thought about it. They've thought about Sheila, and they saw, by the way, this is the most we could do. So I walked into it with a lot of trust. When I moved to Jumia, I was like, I think when I was negotiating, they kept telling me, oh, it's a startup, here. Hey. And then you get into the organization and you realize there's a guy earning 3 times what you're earning.
Yeah.
And it's still a startup.
It's not. It's not changed.
It's not changed.
Yeah.
So at that point in time, that's when I realized, oh my gosh, I need to advocate for myself. So it talked to a lot of people. I had mentors. I've had very powerful female mentors. There's Linda Moturi, who still works at Citibank. I have people in my circle, my peers, who will tell you whether you need to talk more about yourself. You are worth more. Or people you've worked with and they're like, wow, how did you achieve that? That's when you realize I'm not doing something ordinary here. So as I've gone into more jobs, I have really pushed back. Where it's not at 30%, I'm like, we need to have achieved X. We need to get club membership here. For us to get club membership, you work backwards.
Right.
And that's the percentage now you come to. And now when you have a tangible number that you're working with, those ones are something in your head, like do times 40%. Those ones, you're not very firm because it's just 40% to you. But when you attach it to something, then you're more passionate about it. And why I'm working hard is because I need X and I need Y. So along the journey, I think I've become smarter about negotiations.
Right.
Yeah, because it's attached to something. It's attached to, I need to achieve this so that I can contribute to the family pool.
Right.
Yeah.
But, I mean, I think that though, and this maybe, I know you had said you didn't particularly talk too much about the personal life, but so if what is that, does that apply to both of you? So as you are getting a salary increase or you're asking for more, because you're living on one salary, so to speak, and the other salary is being invested, are you having the same conversation with your partner and saying, okay, now I'm moving from 300 to 600. You also need to find a way to get your income to 600 so that we are investing 600 and living on 600.
I would say on his side, he's a risk taker. I'm the one who even stops him. I'm like, where? You remember we have 3 kids at home. So actually, I felt very motivated. When they say the people around you motivate you a lot, I have friends who also have done very big things in their lives. So we've all tried to keep each other accountable. So having a circle that is also constantly trying to improve themselves, a partner who's a risk taker, who will go above and beyond to just make things grow, it also motivates you. So both of you are growing neck to neck. And then one thing that happens is that when you get married early, some of the things you need to do is to also try and retain your individuality, where you're not
Don't get
complacent.
lost in each other.
And then you both have to lift each other up. If you feel like you've gone up to a certain level, you drag the other one along. You're like, hey, see, this is the view I have from how high I've gone up. So it helps.
Okay.
Yeah.
I don't know if you can give me, and I know it may not be your story to tell per se, but I don't know if you can give me a practical example of your husband pushing himself and like risk taking and in a way that pushed you or the family to be able to move to the next level financially. I don't know if you have a story you can give us or an example you can give us.
So my husband is a doctor. And being in school for so many years. And then he went to his internship. He was at Kenyatta National Hospital. So they're not very far off from each other. You know, doctors, when they're doing the internship, they're at hospitals throughout.
Yeah.
And I remember I got my job offer at the same time as he started his internship. And I remember showing him my offer. He's like, 100K. And then he shows me the letter he got from the ministry. It was 30K. So after 7 years.
Yeah.
Someone is earning 30K and you're earning 100K, and they obviously studied a lot.
Right.
So I think that also, he was like, hey, there's something wrong with this industry. I mean,
Yeah.
I know I'm supposed to wait for returns. Maybe I can change the healthcare system from wherever I am. So he shifted away from practice and he went into the business side of healthcare. So that paid off. So it's some of the things that we do to push each other along, where he'll go to an industry and he'll go like, you know, people with your skill set, if we were to hire you, we'd pay you this much. And then you go like, what? What else am I still doing here? Then you also start trying to improve yourself. Or I see something and I'm like, I saw someone with these credentials. Maybe you should try. And he'll see something and so it feels like having a true partnership where someone genuinely wants the best for you, and when they see things, they share with you.
Right.
Yeah.
Okay. The other element I wanted to ask about was the friend perspective. We talked about, again, having a community of people sort of pushing each other. I think you're the third person to sit here, and I'm going to read your story to Kerubo and Lois, who are 2 other women who sat here who have been in career spaces, but have managed to, with their families, with their husbands, have managed to build really impressive portfolios with a very, the script is almost similar.
Oh.
It's incredible. Both sort of get into long-term relationships really young, make very deliberate decisions very early on, and use real estate as collateral to build really, really impressive things. So, and I remember Lois specifically talking about once they built their apartment complex and sort of clearly moved into a different stratosphere of society, like they lost friends and people don't want to come and visit anymore, and sort of things like that sort of happen.
Yeah.
So I'm curious from your perspective in terms of this community that you've had, what's that been like for you? And practically, again, like what does it look like, right?
I'd say our circle has changed quite a bit over the years. So when you're starting off, you're at the same level with some people. As you grow, then you notice that there's friction. So I think there's this thing that goes around the internet quite a bit. I think around January. Is it end of December?
Right.
That friends are for a season.
Right.
But there are those that you stay with.
Yeah.
And I've had a close friend since high school. We met in Form 1, first day. And we've been friends for a while. And she's also been growing quite a bit. We have friends from primary school. So it depends because your personality also changes as you go along. And then you don't want to be in a place where you don't want some friends to meet where you're like, no, you can't invite them to this party.
Right.
And you can't have 3 children's parties.
Right.
Yeah. So
Right.
I think with time also you notice that naturally things fade. But there are those friends you're with for a while. So I have friends that I have been friends with since I was 9. And they know you, they've also been growing at the same pace. And there are times when you also have to call out your friends. If you're really a friend, then you can call out someone. You go like, hey, I think umelala. Do something about it. And it's always good to have people who are holding you accountable, or people who are like, Sheila, you're not making time for things that we used to. So get your priorities right. Yeah, so there are those ones that are seasonal, but there are those ones you stick with, and it happens.
Yeah.
It's life. Things evolve.
Can you give me an instance where you guys or you are financially inspired by something that one of people in your community did, and you came back home and you were like, guys, like we're not doing enough?
Oh yeah, there's a time when we had just moved into our first house, and then we tend to
This
have
first one that you bought, the
yes,
first one.
We tend to have a mix of friends. We have friends who are like in their 60s, and
Right.
those are the guys we hang out with sometimes. We have some younger guys. We made new friendships along the way. But for this one, it's someone we had been talking to for a while. I think we saw him in his struggle phase. He was selling insurance. And then the next thing, he's inviting us to his housewarming in Runda, like a house you see on those YouTube things.
Right.
With 2 pools, one outside and indoor heated.
Wow.
You're walking through the rooms, you're like, were we not here a few minutes ago? You're like, no, you're in the West Wing.
Right.
So that was inspiring. You're like, this happens in Kenya. Someone can have a house with an indoor waterfall. Wow. So that's when you realize that hujafika, for your friends and your family, when they come see, the prayers that happen, oh, the Lord is good. He has seen, you need to show an example to your relatives.
Yeah.
And then, when you're in that place, you go like, wow, yes, I have really achieved a lot. Maybe I should go to a Harambe somewhere where I'm a chief guest.
Sorry, yeah.
But then you realize, no, guys are quietly making moves.
Yeah.
So that inspired us.
Yeah.
Where you ask people, oh, so what inspired you to even move forward?
Yeah.
Yeah, and there's some things where sometimes you have to keep yourself stirring up. Because we always get to a place of comfort.
Yeah.
Where you're like, yeah,
Is it
have
nothing
food.
grows in a comfort zone?
Yes,
Yeah.
where you're comfortable, you have food, you can go eat kukupono if you wanted.
Yeah. Which we still haven't done, by the
Which
way.
we'll do one day. We'll do one day. I will. Maybe I might take some of my friends here.
Yeah.
So you have that, and then you realize, okay, but why am I working so hard? Why do I need to wake up at 7 a.m. on a Saturday and do this?
Okay.
So you just have to challenge yourself. It's easy to be complacent. It's very easy to be comfortable. It's easy to go biblical and say all these things are vanity. But then you also need to keep improving yourself.
Right. Okay. We're sort of wrapping up. So I just have like a couple last questions I want to ask. The first one is, so and this again, please do share with us what you're comfortable sharing. In the management of your household, your finances and how it works. So what happens with the residual income that you earn from your investments? Does that ever come and facilitate your lifestyles, or is it purely like for investment for another day and just keep reinvesting? So I'm asking, like, if you're earning rent from one of the farms or any proceeds from the farms, do you ever bring that into your daily expenses, or is it just purely reinvested, and you're very strict about living on the sort of 1.5 or 1.25 salary that you live on as a family?
We reward ourselves because it's important too. So we do trips, we do things with
Yeah.
the money. Sometimes it's reinvested, but not. I would say it's not all of it. Yeah. So we do reward, where there's some things we'll do because it's important also for our kids to get exposure. There's some things we'll do because it's important for us to go away by the two of us. So it's something we're doing constantly. You have to pay yourself.
Okay.
Yeah.
Another thing I wanted to ask is, have you guys done anything extraordinary in order to achieve this portfolio that you've been able to achieve? Have you, and by that I mean, did you earn like extraordinary amounts through your employment, or did you work extraordinarily hard during the process? Because it's not ordinary. I mean, like I said, maybe I haven't asked enough of everyone who's been here, but like there are 3 stories based on what you told me that like really resonate, and I'm like, yeah, it's very similar, and that's 3 out of 100 and whatever we are at, 100 and something stories,
Okay.
right? So it's clearly not an ordinary thing to some extent. So I'm trying to understand, what's the extraordinary thing that you have done in your journey to allow you to build the portfolio that you have built?
I don't know. Do you work out?
Yes. Yes, I do.
Are there days when you wake up and you do not want to go?
Yeah, of course.
I think it's similar,
Yeah.
where if something is really worth it, you'll put in the effort.
Yeah.
And some days it won't be 100%. And some days you're just putting your leg in front of the other, where you're like, okay, I'll just show up and do what I can. So I think it's showing up and doing what you can. I know one of my biggest regrets is back in the day when we still had our savings, we hadn't gotten a lot of stuff in our portfolio. I had about land going for 250K, I think on Kangundo Road. And I started and I was like, who wants to go to Kangundo Road? Surely. First, I'm dissed about the red soil on my...
On Kiambu Road
Yeah.
already.
And then I go to Kangundo Road. And to be honest, I wish I had bought. And I can't tell you what we did with that money. I can't, for the life of me. But I wish I had done what I could. It doesn't seem big, but you can do what you can with what you have. And that's the biggest thing. You don't have to wait for yourself to earn $1 million bob per month to say, okay, now I'm going to start investing in real estate. And one of the biggest inspirations I have is from like our parents, where someone was not earning more than 150 at some point, but you hear they have pieces of land in some random places. Some days they tell you, oh, by the way, I have some land in Komarok. And you're like, how? You are earning net after you pay for school fees. I think it's like 3 bob.
Yeah.
But how are you buying? But it's because they're very prudent. When you ask about your parents, probably some of them had 5 kids. Put them all through school.
Somehow.
How? So we all have the resources available to us. It's just prioritizing and making those hard decisions. Hard decisions don't have to be you come with a notebook, a calculator, you're like 10x to the power of 5 is equals to this. This is the lifetime value. No, it's more about, I have an extra 10K. Do I let it sit in my account? Or is there somewhere, even if it's land for 200K, can I start buying? I'll pay it off maybe in a year.
Yeah.
So it's those small steps that help you.
Okay.
I would say that's the key thing.
I want to see if you can bring this home for me, and I'll ask it and see if you can answer it. So if you were to use that first house that you guys bought as an analogy of, there was nothing extraordinary that allowed you guys to get that first house, can you give us context of the amount of sort of deposit that you guys had to put down, how much you guys had been collectively making to allow you to even to save enough for that, and then you said it took 6 years to be able to pay it off? Yeah.
Ooh, that's a hard one.
Yeah.
I think collectively we were at 1 million plus.
Okay.
Yeah.
At that point in time.
Yes.
Okay.
But we needed to, like I said, intentionality above everything. Even prepaying your mortgage by 50K, it helps. You might think it's a small amount, but it helps. For anyone who does accounting and you look at your mortgage statement, when you're starting off, you'll see that maybe you've paid 1.2 million in a year, but of that 1.2, what has gone towards repayment of the principal is maybe 100K.
The rest has gone to interest.
So prepaying helps, like assuming even these are 13th month every year and you decide to pay off your principal by that much. It helps. You can even shave off a year or two. So that helps. I see a lot of people saying, oh, don't take a mortgage, but sometimes there's that opportunity cost. What we've seen in the market is that real estate prices really grow. So sometimes it is an investment, but you have to be prudent about where you buy and what your vision is. So that's very important.
Yeah.
And it's also good to leverage on experience from people, because for the longest time, when you start off, you don't know when you see reeds on the ground, it's a swampy area. Or sometimes you might not think about asking, is there a road coming here in the future? You don't think about looking at the plans. So it's important to do that. You can prepare in terms of your housing journey. Just be prudent about it. Look at the area, think about it. Sometimes remove the emotional aspect out of it. Do not look at it as this is a long-term investment. Look at it like I want to flip it in the next 7-10 years.
Yeah.
Yeah.
Okay. So if I've heard, I guess you correctly, is one, you used directly repaying the mortgage early as opposed to sort of paying interest. So you use that as a tactic. You were able to put down like 1 point something in deposit, and then sort of just using that repayment tactic, pay back the loan within, I guess, 6-7 years. Okay.
And be very careful when you're moving jobs. Benefits really count. Bonuses are awesome, by the way, not just for the huge, the feeling you get when that money hits.
Yeah.
But they really help in meeting some of these obligations. So like I said, when you're joining a job, it's not about the net increase. You're looking at everything, and these are my financial goals. How do I work backwards? Yeah.
Okay.
Then from there, then even the bonuses, everything, you already know what is going into it.
Yeah.
So that even when the money hits, you know it's not your money. It already has a purpose, and that helps.
Okay. Last question is, how did you, I'm assuming that you had stretch goals in one way or another with your financial goals, meaning that there are things that you wanted to achieve financially that you didn't necessarily have the money for at the time you were making the goal. How did you, or in your life, what's been the thing that happens that allows you to meet that gap? Yeah.
That's a hard one. But what I do know is those stretch goals, again, moving jobs has helped me a lot. And sometimes it's the value you give, because it doesn't mean moving jobs outside, even within. Because at the end of the day, yes, you're meeting the organization needs. Like we said, you're also a consultant. You're working for yourself and for your life. So that also ensures that you have maximum impact in the role that you hold. No one can come back and say, oh, Sheila. Sometimes, no, it's Sheila, but then she did X and Y. So that creates value for you even within the organization, that people see, oh my God, she can handle way more. And then just growing within that, and whatever else you invest in, it should be able to give you some income. So for the farms, you always know you have income. For some things like tea, you know you have annual bonuses. How do you plan for that? How do you ensure that it's going towards your long-term, your stretch goals?
Yeah.
So that helps.
Okay.
Yeah.
Those are my questions. That's it for me today.
So it's my turn now.
It's your turn now. Anyway, I don't know if you have one last thing you want to say around finances, basically. Or actually, maybe I would say this: if you could describe your financial journey, in like, I don't know, whether it's via a phrase or a movie title or a song title, what would it be?
Oh, wow. Movie song title.
Or just a phrase, like just a what's it called, idiom or whatever.
One word would be intentionality. These things don't happen by accident. You have to be intentional about it.
Yeah.
Yeah.
Okay. I think, based on the story you've given, I think, that's fair. Thank you so much for coming on to Financially Incorrect. I've definitely learned a thing or two. I hope the people who listen to this will learn a thing or two. And so we'll see you guys next week, next Friday, on the next episode of Financially Incorrect.